Okay. Hi, guys. We just had the first Labour budget for nearly 15 years. And in that, Rachel Reeves delivered this government's first budget amid frenzied speculation as to what would be included. Now, the government had already persistently warned us that the country needed to navigate, in their words, unprecedented circumstances, with warnings of unexpected fiscal black holes having to be filled, along with a need to fix our broken public services. Labour promised not to increase income tax, national insurance, VAT, or corporation tax in their manifesto, and said that they aimed to protect working people while struggling to define what that actually meant. We'd also been warned that the budget would increase taxes by a record £40 billion, which Rachel Reeves did confirm today. I mean, in this Halloween budget, Rachel Reeves tried to balance the tricks regarding those tax increases with some treats regarding spending. And to help me break down what she announced in this rather lengthy budget, I'm pleased to be here with my colleague Andy, a specialist medical accountant who will not be new to the listeners of the Medics Money podcast. So, hi, Andy.
Yeah, hi Ed. An interesting budget. It did go on for quite a while.
Yes,
but we got there.
Yeah, we got there in the end, and then a rather lengthy document to read afterwards that was published on the government website. But we've got through the budget, we've got through the large document. So let's get on with what actually was contained within that budget. And let's maybe start with what has grabbed the headlines, or at least one of the changes, those changes to employers' NIC. What do you make of that, Andy?
Yeah, so the employers' national insurance change was really the big revenue raiser that's through this budget. It didn't come as a surprise because they kind of leaked this over the last couple of weeks, but we didn't actually know the full impact of it. So what they're going to do is two things. Firstly, increase the rate of employers' national insurance from 13.8% to 15%. So that's a rise of 1.2%. And effectively, this is charged on employee pay and paid by the employer. So it doesn't affect an employee's pay packet, which is the big emphasis she made. But the second thing is, at the moment, employers' national insurance only kicks in after a certain income threshold. So at the moment, if you earn below 9,100, which if you're in a part-time job, you could well do, there's no further employers' national insurance to pay. But anything above that, it applies on any income above that. They're reducing that threshold from 9,100 to £5,000. So that's going to catch more people for which employer national insurance is going to be due at a far higher rate. And just for an example, essentially, if you had any employee earning above £9,100, then at minimum, the increased employers' national insurance is going to go up by £615 per annum, but that will grow as income grows. So, for example, if someone was on 30,000, it will be £866, so slightly higher. So it's going to be a sizable amount of extra cost within the NHS. And probably, particularly of concern to GP practices and GP organisations where they're going to have to bear this cost as the employers, and they are reliant on funding coming in through the NHS to subsidise that. But as we've seen in the last couple of years, that really hasn't flowed through properly. So it is a big concern. I think the other factor, just quickly on national insurance, is there was mention of something called the employment allowance in there, which is an allowance to protect small employers from national insurance exposure. Unfortunately, though, that doesn't apply to most organisations working with the NHS, because there is a rule that basically if you've got more than half your work with the NHS, then actually, essentially, you don't get access to that employment allowance. So GP practices don't get that at the moment. So they're not protected through the employment allowance, and they're not getting guaranteed funding. So it's a slight risk going forward.
Yeah, absolutely. So it's going to affect lots of, as you say, GP practices in particular, the NHS in general. And of course, there probably will be some of our listeners and viewers who potentially pay out a small salary within their companies of up to, let's say, £9,100, not being caught at this point in time to employers NIC. But of course, that will be cut to £5,000. I think, is it from April next year this is all going to take effect, presumably?
Yeah, so it's not now, it's not imminent, but it is from April next year. And we'll perhaps talk about this later. It's going to coincide with the NHS review that's going to come out around about that point in time. Mm. So we don't know how the funding is going to flow. Hospital trusts will be concerned about this. GP practice is very concerned about this. As you say, it affects small employers as well. So, all in all, it's quite an issue.
Yeah, absolutely. So, as you say, the actual substance was leaked. We knew it was going to be a thing, but we didn't know any of the details. Something else that was very heavily speculated on and leaked in detail in terms of the overall picture was an increase in capital gains tax. But again, no detail up until today. So what's happened with capital gains tax, Andy?
So capital gains tax, I mean, there's multiple rates that capital gains tax gets paid at, but essentially the majority of them are increasing. So at the moment, the lowest rate of capital gains tax is 10%, and that's going to rise to 18%. Excluding residential property, the normal rate is 20%, and that's going to rise to 24%. So we're going to see a rise instantly in terms of capital gains tax going forward. Useful to know, though, that actually one of the things that was a lot of speculation around was residential property as to whether they would change capital gains tax and that, and they haven't. They haven't touched that at all. And that was always at 20, well, was reduced last time in the last budgets by Jeremy Hunt to 24%, and they've kept that at 24%. So we're going to see baseline capital gains tax go up, which affects if you've got shareholdings, affects if you've got property and all those kind of things. But there's a second thing as well, is you had business assets. Basically, with business assets, you were paying basically 10% on the first £1 million of gains, and they're going to increase that rate as well. So the 10% is firstly going to go to 14% and then to 18% to align with the kind of lowest rate of capital gains tax. So all in all, it's going to be a rise. How much it will bring in will depend, because it obviously depends. Capital gains tax isn't charged unless you sell something that's subject to capital gains tax. So if people don't sell anything, then they don't raise anything. So we'll have to see what happens there. I guess just one further just side issue, which isn't capital gains tax, but stamp duty land tax, SDLT, that hasn't been changed at all, with the exception of second homes. And if you are looking to buy a second home from tomorrow onwards, so from the 31st of October onwards, then the rate of tax you're going to pay on a second home, and that includes buy-to-let properties as well, the premium will rise from 3% to 5%. So an increased cost of buying second properties.
Yeah, absolutely. And, again, there's been lots and lots of speculation about what would happen with regarding capital gains tax. Something that was commented on and was a potential for the government, which they've avoided, was they were going to actually levy capital gains tax on assets at death. That was one thing that many people speculated they would do, but they haven't done. So at the moment, when someone dies, there's no capital gains tax on their estate. That goes into the inheritance tax bracket. And there was a thought that the government might make changes to those rules, but that was one of the many pieces of speculation that didn't actually come true. But there were some changes on inheritance tax, so perhaps we can move on to that.
Yeah, so inheritance tax is charged basically on death on the estate. Probably worth just saying there are exclusions to that, and the biggest exclusion is if you transfer it to a surviving spouse. Then in that circumstance, you don't pay inheritance tax at that point. You then will pay it subsequently on the second death at that point in time. So what they've said is they are going to freeze what's called the nil rate band. So not actually tinkering with any bands, but they have extended the length of when it's going to be frozen to. So that's not going to change. Where the changes did come were kind of technical ones and won't probably affect too many doctors, but are worth mentioning. Firstly is if you've got, pensions, for example, I'm not in the NHS scheme, I've got a private pension, and, if I died at the moment, that pension would pass into my estate tax-free. That is going to change. Now, interestingly, that's not going to change next year. It's going to change in April 2027, which to me, and I've already seen lots of speculation, the problem when they start changing stuff like this, it gets really complex in terms of legislation and implications in the whole pension side of things. So I suspect they're going to have to do a bit of, research into how this is going to operate and the impacts of that, which is why they've delayed it a further year. They've also brought some changes in on what was called agricultural property relief and business property relief. So assets you held in businesses or agricultural businesses, again, had inheritance tax exemptions. So they've played around with that in terms of reducing the reliefs that are available to bring more of those assets into charge for inheritance tax. Again, won't affect our listeners too much, but if you did have a business, a side business that you're running and did die, then it could potentially change that. And again, changes things like where you've got, investments in properties, in businesses. So things to consider, really.
Yeah, absolutely. I see. So I think those are the kind of the biggest changes. Of course, there were many other changes that were mentioned. Many of them not particularly a big surprise. So, of course, Rachel Reeves confirmed there's going to be VAT on private school fees from January. The non-dom status we knew was going to be abolished. That will be abolished from April next year. But there was some, I guess, a sliver of good news in terms of the income tax thresholds. Isn't that right, Andy?
Yeah, so we've talked about, I think, the last three budgets we've talked about this, and essentially the tax-free personal allowance and all the thresholds of tax in England and Wales. So Scotland has a different regime, but certainly in England and Wales this applies at the moment. They've all been frozen for a while, so we haven't seen the increase in where the 40% ban kicks in, where the 45% ban kicks in, or the 100,000 barrier where you start to lose your tax-free personal allowance and other things, which is slightly problematic. Previous government said they were going to keep that frozen to 2028, April 2028, and this government have continued that. We thought they might extend it for another couple of years, but they've decided to keep it at the moment, because they could always change this in the future,
Yeah.
to April 2028. What that does is effectively is something called fiscal drag, in that it brings more people into higher rates of tax. So over time, the tax take goes up. So if you move from at a pay uplift from 50,000 to 53,000, for example, the majority of that extra pay uplift will be at 40%, whereas previously, if inflation applied, it would probably only be at 20%. So, but it's useful that they just said, look, we're going to, at the moment, end it on in April 2028, which is good. Other things, fuel duty. We always talk about petrol and diesel costs, etc. Always a great one for the newspapers. That one, they were due to end a 5p cut in fuel duty and freezing of, an RPI link that was previously there, which has currently been frozen because of cost of living prices. But they've agreed to keep that going for another year. But I suspect that will disappear in the future, and we'll go back to an escalating fuel duty cost.
Yeah, absolutely, absolutely. Watch this space. All these things that have been delayed. Of course, the main focus so far has been on taxes. Obviously, Rachel Reeves did mention quite a bit about spending as well. Quite large spending increases or spending commitments have been announced, including a £22.6 billion increase, I think, in the day-to-day health budget, including and also a £3.1 billion increase in the capital budget for this year and the next. I guess a bit of a caveat that £22.6 billion may not necessarily actually be the £22.6 billion that they actually announced.
Yeah, so when she said it, I was in the car driving home at that point in time. I thought, wow, that's a massive increase that they're going to invest, and it is, it is a big increase. 22, you can't ignore 22.6 billion. It's a big increase. But when you actually then read the detail that comes out later, and it takes a while to get through that detail today because there was an awful lot in there. Actually, it was really weird. The increase is not just the increase year on year. They've rolled it kind of back to 23, 24. So it's an increase over a 2-year period. So it includes the current year we're in and next year. So it's not, 22.6 billion in 1 year. It's 22.6 billion over 2 years. And we then have to factor in a couple of other things. Firstly, we did see some, uplifts in pay in the public sector, particularly in 24-25. So, the impact of the consultant pay and the resident doctor pay disputes being settled for the time being came through in terms of increased costs, and that eats into that budget. And secondly, the NHS is going to be affected massively by this rise in employers' national insurance. I've read something, maybe as much as 3.5 billion in terms of the NHS. So that again eats into that amount, because I assume they're not going to add anything beyond that. So, it's good. It's going forward. It is more than, it is a real increase, but actually may not be as big as an issue looks. So I think probably the most crucial thing is where that's going to land. And we're not going to find where that's going to land until the 10-year plan for the NHS gets published, and they're talking about spring next year.
Yes.
So they've talked about moving from, secondary care into community, digitalisation, etc., and things like that. So we'll just have to see where that rests when the money actually flows through. That makes it difficult. It makes it difficult for, the current hospital trusts, current GP practices to plan, because actually they just don't know what their funding allocation is going to be going forward. And, it's all pending this review. So we shall have to wait and see.
Yeah, absolutely. Yeah, makes it very, very tricky.
Yeah.
Definitely.
I mean, interesting as well. I'm going to read out two clauses that are in there. It's hidden way down on page 57 of the document that came out, and it's commenting on public sector pay uplifts. So we know how important that has been to our listener group over the last couple of years, and continues to be, because the settlements that have been made are dependent on improvements going forward. But they actually mention within the budget papers two clauses. 2.87 says the government remains committed to delivering fair and timely pay awards for public sector workforces in 25-26. However, it will need to carefully consider the trade-offs required to afford pay awards. Over the medium term, above inflation pay awards are only affordable if they can be funded from improved productivity. So basically, that's a warning shot being fired there. It's a warning shot being fired that actually, we'll see what the DDRB say next year. And that process, I think, has been kicked off now. They're not guaranteeing that it's going to follow through if they can't afford it, which is, I don't think was going to please a lot of people in the union sector. The second point then says 2.88 department settlements for 25-26 will need to fund the next round of public sector pay awards, and departments will set out their affordability evidence to the PRBs in the usual way, taking account of expected inflation over the next financial year, which is forecasted by the Office of Budget Responsibility to be 2.6%. So basically, if anyone's looking at awarding more than 2.6%, they are going to have to put some justification into the government to actually justify this. And they have cited, acute retention and recruitment issues, which clearly does apply to the NHS. But again, it's just a bit of a warning sign that, we're putting these headline figures in, which we're talking about great investment, but actually it's going to have to fund these things. So how much that eats into what's available to increase capacity, I guess we're going to have to wait and see.
Yes, yeah, absolutely. Yeah, I'd say the devil's in the detail. Let's wait and see what happens. There's also, on the theme of pay increases and so on, there were some increases in the national minimum wage as well, or national living wage, and that's going to be increased by 6.7% from £11.44 an hour to £12.21 an hour. Obviously, that's potentially good news for our patients, for a lot of people listening out there. Their patient group will now get pay rises, but obviously it will impact on the NHS presumably as well.
Yeah, and also in addition, what they have done is increased 18 to 20-year-olds as well, who have a lower rate, which is having a family members who are in that bracket. I always felt it was a bit unfair. They were doing the same job as other people they were working with and getting paid less.
Definitely.
So it's good that they're at least acknowledging that, albeit haven't gone the full transition they plan to in the future to align them with all adults. But yeah, you're right. And you would hope national minimum wage isn't an issue in the NHS, but it is. It's a massive issue. We do have a lot of staff who are paid at national minimum wage levels, and therefore that cost increase is going to have to be passed on. And that's on top of, fairly large increases, close to 10% increases in the previous 2 years. So, it's good for those people, and, really important that we, make sure people are paid at a rate they can live off. That I don't think any doctor would disagree with that. But again, it's then going to how that gets funded. And it also just doesn't affect people at national minimum wage. What we have to then remember is, if you're currently on £12 an hour, you're above national minimum wage, but then you're going to go to £12.21 as being the national minimum wage. Well, you're going to want slightly more than that. You want to be above, keep that being, that differential. And certainly at those lower pay bands, we're going to have to see some reasonable high percentage increases above the 2.6% they talk about as being the predicted inflation, just to keep that differential going. So that's, again, knocks into hospital trust budgets, but also GP practices and GP organisations and other primary care organisations. They will be looking for their funding model to be adjusted to reflect that, because I don't think in the last couple of years it particularly has taken that into account. So again, it's a bit of a watch this space really on that, but again, useful. It's a positive, because actually lower paid people do need to be able to live and pay for. They often face the highest rates of inflation on the things they buy. So it's important we pay people properly, but it has consequences.
Yeah, absolutely. As we said many a time, and such at the start, there's been a huge amount of speculation about what's going to be in this budget. Lots of things have been mentioned, but then, of course, haven't come into pass. Are there any important things that weren't included in the budget today, Andy, that you can think of that are worth mentioning?
Yeah, so I live in the pension world at times and get dominated by pension discussions, particularly as we talk about things like the sort of, McLeod rectification issues that are going on at the moment. But there's been huge amounts of speculation around what they could possibly do to pension tax relief. But they didn't change it. So you still get your tax relief at your marginal rate of tax. There was talk around applying national insurance contributions to employers' pension contributions, which affects all kinds of businesses, including the NHS, because there's a large employer contribution paid in respect to the pension. They didn't bring that in. There was less talk around things like bringing back the lifetime allowance. Labour had already set out they weren't going to bring that back, so we didn't expect that to come through. But also, they didn't affect the annual allowance, and that still does remain problematic. Despite the increases that the previous government put in place, we are still going to find, particularly at your higher end consultant end and higher end GP end of earnings, people still impacted by the annual allowance. And certainly for the current year, we're in 24-25, because of those pay increments that went through following the conclusion of the disputes that were ongoing. They were quite sizable. So it's going to start catching people again. So slightly disappointed that they didn't acknowledge that, but not surprised, because actually it's just one of those things that actually is very niche. It took several years for the previous government to understand it and get there. So I guess it's going to be continuing to batter at the door of this government because the worry is actually they want all these people to do more NHS work, and they're not going to do it because they're just going to have punitive tax charges again. Other things that didn't change, we speculated previously whether they would change the ISA allowance. So at the moment, you can put £20,000 per annum into an ISA, which is a tax-free investment. And we speculated whether they would either decrease that amount or perhaps put a lifetime cap in terms of that. But they didn't actually talk about that at all. So they didn't change that, which is good. So, if you're looking to invest in a tax-free environment, ISAs still remain a very good product and opportunity to do that, which is quite good. So quite a few things. And in fact, actually, in reflection, given I think it goes back to our friend Tommy Perkins was saying last time when we did our budget guessing podcast. He was on about, actually, I wonder if a lot of this scare stuff was just to prompt people to do things and sell things, because there was a load of scare stories that came out. And yes, it is a tax raising budget, but there are so many things that have been mentioned that haven't been done. So I'm sure people won't be pleased. I'm sure businesses aren't going to be pleased about paying more national insurance costs. But actually, overall, it's probably not as bad as I thought it could be.
Yeah, absolutely. I definitely agree with that. I think Tommy was right there. I think a lot of that speculation didn't come to pass, and was quite wide off the mark. But that's great, Andy. Thank you so much for your time today. That's been brilliant. As you say, a big budget. Yes, big amounts of revenue increase being brought in, big spending commitments. Some will be hurt by the budget, of course, but as you just said, from the speculation, it could definitely have been worse. But as always, we're going to leave it up to you guys to decide what you think of Labour's first budget. Take care.
Yeah, thanks, everyone.